Awesome. Well, I just wanted to take a minute here and introduce myself and introduce Dan Rogers, CEO of FintechForce. I want to thank everybody for joining Entendre's second annual webinar. Dan, if you don't mind taking a second here to introduce yourself, and then we can do a bit of a larger intro and get started.
Thanks, Cody. Thanks for the opportunity to talk today. So I'm Dan Rogers. I'm the CEO of FintechForce. I've been a CFO supporting venture-backed fintech companies really since before they were fintech in 2008, and have been fighting the fight along with founders and entrepreneurs to build their businesses and to make a difference. In 2020, honestly, there were more opportunities than there were capable accountants. And so we created FintechForce to really focus exclusively on addressing the unique and complex needs of fintech companies that include Web3. And it is certainly no exception. So we've learned a lot in the last 4 years in supporting small businesses, and I'm happy to share some of what we've learned today. So,
Perfect. Well,
I think you want me to kick it off here and go for it?
Yeah, well, one quick second. I just want to also let everybody know that we're actually going to be doing a 3-step series here with Dan. I'm sure he's going to go over it in a bit. But look out for the next 2 coming in March and April with Dan. And with that, I'll let you take it away.
All right. Well, thanks again, Cody. I wanted to first just speak to the audience and say we have a small group today, and I think that creates a great opportunity for more dialogue and more Q&A. And I hope that if you have any questions, you won't wait till the end, just kind of fire away, and we'll see if we can address your questions in real time. And then the last point I would just start with is we don't start a project in crypto or Web3 without a subledger. This day and age, with the growth of businesses and the complexity and the growth of crypto, it's not. We don't think it's like financially responsible to start a business and really start running it quickly without a subledger. And of course, we always start with Entendre. So it's a great opportunity to kind of build the partnership today here. So let's go to the next slide. So it's kind of interesting when we marketed this webinar, we were talking about insource versus outsource, and I kind of built all those slides, and honestly, it felt pretty self-serving because I'm obviously a believer in kind of outsourcing. I run a company that does it, and I didn't really feel at the end of the day like that was the point I was trying to make. The point is you should always hire the smartest and best people to run your business. And this day and age, the distinction between whether they're a W-2 employee or a 1099 employee is increasingly kind of irrelevant. And I have a bunch of thoughts here to share with you today about that. But the theme here is go for the most qualified people 100% of the time. So next. So the way we tend to think of it is the conventional wisdom is really backwards. You used to hire full-time employees when you wanted quality and you wanted security and stability in your finance and accounting business. And the reality is today, if you want the highest quality, the most specialization, a lot of times there are professionals that are doing that on a 1099 basis as contractors, and they're getting lots of at-bats in building Web3 companies. And so they're getting lots of relevant experience in a whole ecosystem where there is not a ton of experience in accounting. And so, and obviously the funny thing about contractors is the distance, like they're using the fees you're paying them to pay their mortgage, right? So it's like that, there's like inherent stability. And so I think now you actually get more stability and more quality in outsourcing, or you can get just as comparable. And so I really encourage people to think openly, not of it as a framework where you're either in or out, but it's just you're getting the most capable people, or you have people that actually can't deal with the complexity of Web3 transactions. So we'll talk through that. I'll give you some ideas on how to manage through it. So here we go. So first is this idea of having capable people or incapable people. And I think the accounting needs in Web3 are very different than what people are taught traditionally. We typically think of accounting in terms of like cash accounting or accrual accounting, but the reality is in crypto, what we're really doing is accounting for securities, and we're really marking to market the value of the securities. And that's just not a concept that is taught to a lot of accountants. And so really finding people that are capable, that really understand the concepts is really important. And excuse me, when you think about insourced versus outsourced, right, the reality is that I think you can find firms that are specializing in Web3 that are safe, right? That are safer, that see a lot of subledgers, that see a lot of different companies and a lot of different currencies, in a world where this is all very new. And so I think that there are real merits to going out and finding people that have seen a lot of different companies and how different companies are doing it, and really have a good sense of what best practices look like. And then the last thing is really you have to focus on really the best talent possible. And I would argue that you should do that just like you are really thoughtful about what kind of engineer you hire, or kind of the specialization of your salespeople or your marketing people. You really need to focus on the specialization in your accounting department, because in this space in particular, it's so different that a traditional accountant could get you in trouble quickly. So we think it's really important to kind of use your talent management muscles to really kind of find great people. Next. And then the next point, it almost seems kind of odd to say, but take it seriously. Invest in the exercise. Invest like it's your next engineer. I mean, it's odd to say it, but you're going to end up spending $150,000 on a great accountant if you hire someone, or if you go to some outsourced firm to do accounting. It's a big investment. It's a lot of capital. And I think we find that that a lot of people take it for granted as an administrative exercise. And I think in 2024, in a Web 3.0 company, that I don't think we can take it for granted. It's really quite complicated. And it's really important that you kind of, as you start this project of building a team, that you really think about it in terms of what's the first investment, what's the second investment, how are you going to build this capability? And we always recommend that you think about the complexities of your business. And there are really traditional accountants that can do the traditional bookkeeping, that is the payroll, paying the bills, sending out invoices, right? And then there is the complexities of crypto, and where a subledger is really required. And we really encourage people to think of those two things separately. That the complexities of crypto, we have specialists on our team, and we don't think that the traditional accountants that are doing what I'll call traditional bookkeeping in fiat currency necessarily have the skills that you kind of need to succeed in a Web3 world. So, you know, think of your team as, you know, when you as kind of specialists, and when it's time to launch your product and really invest in crypto or have crypto on your balance sheet, then it's really time to think about bringing on the next level of investment in a specialist to manage your crypto accounting. Next. I often talk about how accounting and engineering have a lot in common. And I think, you know, in this day and age, where you can go out and you can buy accounting online, it's pretty competitive space right now. I think that we forget some really basic tenets here. And, you know, one is that you know, a lot of people view in a software world as engineers being, you know, as being mission critical. I argue on a daily basis that accountants are just as critical to your success. One is you can't get very far without an accountant, either from a payroll or a bill pay perspective. But really, at the end of the day, it comes down to who reports your results, right? And do you want to the person that reports your results that ultimately investors and hopefully the public markets will see, you know, that person is really critical to your success. And you want someone that can scale with the business. You want someone that is that brings a lot of contextual expertise. That is, they know Web3, just like an engineer will kind of know the crypto space or whatever language you're coding in particular, right? So I do think it's really important that we think of the accountants in these businesses as not just an administrative function, because what will happen is the business will take off and grow, and the accounting function will lag behind, and it will create real business challenges when you're not able to kind of keep up and do proper reporting for investors. Or in a worst case scenario, you're not able to report your revenue properly because you don't have the systems in place to achieve that. So I really want everyone to think of the accountant on your squad as kind of mission critical, just like the engineer, right? And there's inevitably bugs that happen in accounting too, and we should think of it more like that kind of engineering capability. So anyway, next slide.
Yeah, and Dan, one quick thing there you mentioned that I think is interesting, even just around like headcount planning, right? You mentioned, you know, not being able to report your you know, revenue or finances, and with me heading up partnerships and sales, right? If we don't have a good hold on what our revenue is, that can really change how we plan for the future. And I know that even in my last role, we talked about how strategic the finance team is to every other facet of the business, right? It's kind of a trickle down effect. Whereas if you provide as much value and you have the strategic initiatives rather than the manual work, the rest of the business starts to run well.
Yeah. Well, if you think about it, Cody, when businesses start, right, they use Gusto, they use QuickBooks, they use Bill.com, and that stuff is relatively easy. There's a lot of accountants between San Francisco and New York that can do that stuff.
Yeah.
But when you start having transactions and you start to have a balance sheet that has crypto on it, you really have to start to focus on the quality of your accounting. And it really, if you can't record your revenue, then one might argue, like, what are you doing there in the first place? Like, it's not gonna work for investors, right? So it makes business really hard if you can't record your revenue properly. So and you would be amazed at the number of businesses that I walk into on a Monday morning that say, Dan, everything was going really well until we launched our product and the accountants weren't ready. So we've built a nice little business here cleaning up from those Mondays. So
Yeah, I'm sure. And I'm sure though, at some level, what you're hoping for is to put in good accounting hygiene early, right? Because I think
Oh,
it's one
yeah.
thing to be able to come in and really settle everything and lay it out straight. But in a perfect world, right, you want to be there again to be more strategic rather than somebody that comes in to fix and resolve.
Yeah, it really comes down to being kind of timely in your investment, right? When you're thinking about your product launch, right, you should really be thinking about how are we actually going to do the accounting for this, and when do we bring the right people in and that have the right capabilities, and exactly that way you can avoid kind of the any challenges. So next. There's kind of one kind of critical kind of notion that I see time and time again, and that is startup experience does not equal Web3 experience. And you could insert Web3 for like consumer lending or payments or insurtech, right? The reality is just because you worked at Uber and Uber was a wildly successful startup, right, doesn't mean you're going to do great in a fintech space, right? A business that is very transactional has very different demands. And particularly those businesses where money is coming in every day and money is going out every day, or currency is coming in and out every day. And you really need to, in your search, find people that have relevant experience. And it's not just the most successful startup on their resume. That is often, and that's very successful startups have very smart people, but I would argue that that's a risk that you don't necessarily want to take. You need to find folks that really understand the concepts in Web3 accounting. The other thing is just that there are very technical differences. So revenue recognition is different. You know, maybe there's they had a different role than you're needing them to fill. So I would be really cautious about hiring an accountant just because they've got great startups on their resume. And believe it or not, we see it all the time. Folks that are brought in that have an amazing pedigree that just are not familiar with high transaction, high velocity businesses. And also just, the other thing that's kind of interesting is we see a lot of Web3 businesses that are scrappy, right? That are quite literally thrifty. And you have to have great command of data. You have to be able to get stuff done on your own without having like 5 engineers support you sometimes. And so you have to have kind of DNA that is about getting stuff done and kind of managing data and being capable. So I really want to encourage everybody to target their search on the skills that you really need. So in the case of crypto, it is really high transaction, currency trading would be another kind of place to look. That's not necessarily Web3, but that could be fiat currency, but it is the aptitudes as opposed to the names on the resume that I tend to focus on. Next. We talk about this a lot at our as kind of a core tenet of our business at FintechForce. I mean, we believe that when founders underinvest in finance and accounting, they're literally putting their business at risk. And really what that means is when they're not picking the right people and they're or enough people. I had it's kind of, I had a very typical phone call right before this with a potential client that it's a business that, just closed their Series A round. They're taking off. Everything is up and to the right, and it's great. And they have one person who is doing all of their finance and accounting. And I spent the hour with her kind of talking about her 80-hour week and what did her 80-hour week comprise last week. And that's that puts your that as a founder, that puts your business at risk. So I really want to encourage everyone to think about, there are ways now where you can manage this risk, right? With fractional people or fractional leadership to help you think through it, but don't underinvest too much. Next. So I think I want to kind of share a little secret here about the just the outsource space, because I'm pretty sure that everybody checks references when you hire someone in-house. But the reality is when you approach a business like mine and you're looking to check the box, bring in some people to help you do your accounting, the reality is they're very focused on utilization and making sure that every one of their team members is kind of being utilized. And, maybe their crypto expert is full, doesn't have any time on their dance card, so to speak. And you end up with someone who's not their crypto expert. And I think that it is, most businesses like mine know exactly who's going to work on a project long before that first day. And I think it really behooves you to ask in the selection process, ask to talk to who is going to lead the accounting, who's going to do the day-to-day accounting, and interview them just like you would anybody else on your team. Make sure that they have the right vibe of everybody else on your team. Make sure that they actually have a couple other clients that are Web3 clients. It is well within your rights to say, who's going to work on my business? This is my asset. It's my life's work. I want to know who's going to work on it. And that's very different than, hey, I'm just going to hire FintechForce and trust you guys are going to bring all the right people. Because the reality is, every business like mine is trying to kind of, optimize who's going to work on every client. And you should be talking to the people that are going to work on your business, because the most successful engagements are the ones where you like working with those accountants and you want to work with them, and they're good, exciting people, and not, not people that you'd prefer not to work with. So anyway, I think there's one point, number 3, I want to make here is treat every candidate like they're part of your team. This day and age, as I keep saying, like the line between W-2 and 1099 is really indistinguishable right now. You should put your outsourced, if you choose outsourced, right, you should put them through your recruiting process. You should send them swag. You should invite them to your all hands meetings, right? At FintechForce, we don't charge clients for when we attend all hands meetings, because we want to be part of their business, right? And you should want your accountant to be part of your business, because that will, A, they're going to be engaged, B, they're going to understand what's on your roadmap, and C, they're actually going to know who's on your team. And so it's really important that you think about them like other employees. Mm-hmm. And you might also even put them through your performance management process. So if you have a semi-annual or an annual review process, right, it's important to say, look, this is going well, or this is not going well, because that's, you don't want to get into this cycle of kind of managing people with their contracts and all that. It's treat them like they're people, because the reality is your business does not run on that schedule. And when you need to grow, it's time to grow. So I really encourage you to treat your 1099 team like your W-2 team in every way. So
yeah, and
check references.
Quick question there on checking references right now. I mean, what's the best way in your experience that somebody could, essentially check your reference as an outsourced, firm in a respectful way, right? Like, I'm sure there are scenarios which may be a little over the line, some that aren't, but what's a good way for somebody that wants to check references for an outsourced firm, and how would they go about it?
Oh, so you should, so if if Entendre was evaluating FintechForce, I would expect Kareem to say, Dan, can I have three Web 3.0 or Web 3 client references to call? And then when he, so that's kind of one. And then he can talk to those CEOs that's a layup, or that should be a layup for everybody. I think the other version of it is Kareem saying, I'd like to talk to the person who's actually going to do the accounting every day. And you can talk to the guys or the women that are doing the great work, that are doing the work on the lines and making it all happen. And because the other funny thing about it is, just because I often am out there selling, I can't support every client. And sometimes they're like, oh, well, I thought I was getting you, and I thought I was getting you. And the reality is that's I can't support everybody. That's not really consistent with my value proposition.
Yeah.
But I think it is totally reasonable to say, I need a half hour or 20 minutes with the person that's going to do my accounting.
Yeah. So more or less getting almost a statement of work of, hey, if we go with you, can I speak with whoever is going to be doing the books, and who should I speak with? And almost like an RFP, but more for, kind of references there.
Yeah. And so you could imagine a scenario where you're looking at firms, Cody, and I say, well, Bob is going to do your accounting, and you talk to Bob, and it's, Bob, how many startups have you worked with? How many of them are Web3 companies? What subledgers do you use? What's the difference between, what's your favorite crypto, right? Does he even know, in that case, that, he thinks Ethereum's gonna, plummet. Who knows, right? But you hope that they have an opinion about this kind of stuff, and they're as fanatical as you. And that's what kind of gets you excited. I mean, that's what we go for. That's what we're trying to pick is on our squad. And I think you should, anybody that's outsourced should be just as fanatical about what you're doing as you are.
Yeah, I agree. Why don't we keep going? I know we're coming close to the time here, so we'll make sure that we keep it moving.
All right. Well, let's skip this slide. I think this is kind of a summary for what's on the next one. But the theme here is really, it is the CEO's responsibility. And I would say more and more with startups, we're seeing the accounting and the finance functions delegated either to a chief operating officer or a chief of staff. And that's always, almost always a red flag for us, because what it says is the CEO is his time is, is very valuable. It's too valuable for accounting. Well, the reality is there's nothing more invaluable than actually the results that you're reporting and the financial health of your business. And we forget that sometimes we're in business to make money. And we wouldn't be here if we don't keep track of that stuff. And we find it when the accounting and finance are delegated, right? Quite often it's not a priority, right? And the conversations that are healthy that need to happen are not a priority. And so we always encourage the CEO to be an active participant in the process, to make the time, to really maximize their kind of communication of what their issues are, what their concerns are. But also when the accounting team is struggling, when the business is taking off and having 200% growth, and the COO is crazy busy supporting that growth, the accounting function can't be forgotten at that point. That is when it's most critical and when you can most easily stumble. So it's important to have the CEO's ear. I really encourage every CEO to step up. And the other thing that we don't talk a lot about, but a lot of CEOs are engineers or reformed engineers and don't have a great handle on financial statements. And you should find a CEO or a mentor or an advisor that can walk you through your financial statements, that can really be your financial teacher. Because in business, you're not going to get to the end zone if you don't have some grasp of accounting and kind of modeling and how things really work. And I just think it's that is part of this whole equation of pushing the work off to others. The reality is it's part of your development as a CEO to really learn accounting, just like you learn sales and you learn marketing and you learn every other function. If you neglect it, you're just neglecting that part of your business. So I really encourage you to find a good partner and kind of work with them on your finances.
Yeah, and it's funny you mentioned that too, because I think one of the old adages I've heard in startups is you're building the plane as it flies, right? And to your point around knowing you're not going to get to the end zone without having like some grasp of financial model. And I think of it almost as a blueprint, right? You're building the plane, but at least you know it's a plane. You're not midway through thinking you're building, a submarine now, right? You need to have good components all the way through so you can get to the end zone or get to the end goal.
Yeah. Yeah. Think of the financial statements as like the radio on your airplane, right? They're how you communicate with the rest of the world, how it's going.
Mhm.
And if you don't have a great grasp on how the radio is working, you might end up in the wrong place.
That's it. That's it.
Anyway, go CEOs. And last thing here is you get what you pay for. Really pay attention, go through your financial statements. As a CEO, like you've or as the person responsible for finance and accounting, like make sure you take the time every month to go through. A lot of people now are just saying, well, what's my monthly burn? Well, there's so much more that you can learn about your business from your financial statements, where people are making investments. It is really important that you take that time once a month, a couple hours, to really, do a deep dive into your financials. AI, I don't rely on, and it's completely yet. It's great, but it is really in its use for pure accounting, and we tend to inherit a lot of companies that have used AI that didn't quite get it right, and so it's a mix right now. And I would say don't go the pure AI route. Like take your time, make sure you have good people reviewing the results. I think the other point I just want to make here is we work a lot on companies that are Series A, Series B that do have product market fit, that are really growing quickly, and they didn't get their accounting right. And I can tell you, they're the biggest clients we have. We send them the absolute biggest bills because cleaning up costs a lot. And I really regret saying that. My goal in life is to start early with companies and to make sure they never have a problem on their financial journey. But for those that underinvest, I can tell you cleaning up costs 5 times as much. And you call me if you need it. But we'd prefer to kind of get you set up right and get things working properly up front. And the worst part, honestly, is usually investors are the ones pointing this out, right? They're the ones saying, "Hey, you really got to fix up your accounting now," and that doesn't look good ever. So, anyway, I really encourage everyone to spend time with their financials, their kind of financial advisor or their mentor, and don't just rely on AI, and kind of make sure you're comfortable with what you have right now. So next.
Yeah. So Dan, I really appreciate this. I know we're coming to a close here, and we're going to have 2 more after this. So you mind telling us a little bit about what's, in store next month?
Okay, so we have 2 more sessions as our 3-part accounting series. The next session is actually going to be if you're a CEO, what are the 5 things that you should actually look at on your financial statements every month? What do you really need to understand to make, and like burn is only like half of one of those 5, right? There's a lot of important stuff you can learn. So it's really like a short course in how do you review financial statements. And then the 3rd session is going to be on all the other things. How should I be handling taxes? How should I be thinking about sales tax? What's the R&D tax credit? What's a 409A? There's 1,000 other things to worry about. We'll give you the checklist to make sure that those are all handled easily. So.
Perfect. Yeah. And it seems like the whole theme of this for everybody listening, as you can see on the screen, is to maximize the financial success of the business. And, I really appreciate Dan, coming on here and sharing that with you. You get a taste of, kind of what he charges for free. And, hopefully this gives you a good idea of what type of partner Dan would be. I know we're excited to be partnering with Dan and FintechForce. So.
All right. Thanks, Cody. Against the last slide here, I would just say that accounting is just like every other part of your business. You have to weigh your investment dollars and think of it as a risk, right? If you underinvest now, you really risk stumbling. It's no different than engineering in that regard, or sales or marketing. Focus on the capabilities of your team members. Forget like what kind of legal status they have. Make sure that they can talk the talk and walk the walk, and that they really understand the concepts and they have great experience in Web3. And invest in your selection process. Make sure you're taking the time to screen people just like you would if they were a full-time employee. Include them in their team, and that's how you manage the risk. So with that, have a great day and thanks for your time.
Yeah. Thanks, everybody. Join us on March 7th for the next series, or the next episode in the series. I want to thank Dan for being a part and giving us 45 minutes of his time now and over the next couple of weeks. And, as he mentioned, putting in good accounting hygiene now is going to pay off. His data shows about 5x. I've seen something similar. So whether you need a subledger, you can always give us a call, or you need an outsourced, accounting firm, you could always give Dan a call. We'd love to hear from you and see if there's a possible fit. So thanks again for everybody for joining. We'll have this webinar on both of our sites in case you want to come back and find any of the information that, Dan was, great enough to provide. So thanks, everybody. And we look forward to seeing you on the 7th. Take care.